Crazy day here for the stock HUSA. What we're going to do in this video is run you through the movement of the stock, a couple things you could have been looking for, a couple things that we paid attention to know that this was going to be a good stock to watch today. If you notice, there was multiple penny stocks running today, so how do we determine which ones are going to be the better ones to follow? With that being said, let's get into the video. So for one, the most important thing that we look for when it comes to penny stocks is whenever they're running pre-market, we typically do not want to pay attention to the penny stocks that are opening on the market really high in trend. We want to look for the ones that are going to be opening lower in trend. So if the penny stock goes up, then it pulls back down and it's opening lower in trend to start the day, there's always a higher probability that that stock is going to run, okay? If the stock is opening higher pre-market, there's always a higher probability it's going to drop out to start the day. The next thing that we're going to look at here is the daily chart on HUSA. So if we go here and look at the daily chart time frame, another important lesson. The stock was pretty much trading above all past resistances. So this is a situation where on HUSA, by the time market open rolls around, the stock is pretty much trading well above all of its previous resistance. And let me explain a little bit further here in just a second. So by the time market opens, we're above this point. No, let me change that over, excuse me. We're above this point, we're above that point, we're above that point, and we're even above our downtrend, okay? So the market is trading above the past resistance. Something else that's very important to notate when you're going to have probably a runner is also, look at this, the volume. Look at the volume back here, look at the volume there, look at the volume there, look at the volume there, and then look at the volume today. Now, of course, this volume is significantly higher because it's already traded so much for the day. But even in the morning around pre-market, close to market open, the volume for today had surpassed all past previous trading volume. So again, resistance is created when there's a move up and then a bunch of people buy it and they get caught holding it. So now we have bag holders. So the next time the stock gets near that previous price that everyone bought the last time, they all sell it because they go, oh, thank gosh, I can get out break even. Thank you, Lord. Right? But then you have newcomers that buy this top and now they bag hold it. So the next time you get close to it, the people that bought that time and bag hold go, oh, I'm going to sell it. Thank gosh, I got out. Thank you, dear Lord. Okay? And then this time we come up, we open up on the day pretty much over all past resistance. We were not starting from below and trading up into. No, we pretty much just started right here at the letter A, which was over all past resistance, with more significant trading volume than all past volumes. Therefore, all the people that you could even say bag held this, bag held this, bag held this, there isn't enough of them to keep the stock down because look at the volume, right? Think about it like an army. It's like Lord of the Rings or one of those epic mystical movies where people are fighting, okay? So you have two armies, okay? We're going to say that this is Army A and then this is Army, well, that's another A, but it's supposed to be a B. So that's Army B, okay? All right, so we have Army A, boom, and then this guy here, that is Army B. And we judge the army size and their strength by the volume, which is down there, okay? So Army A, for let's just say the past year, only has, let's say, volume of like 10 million. So they have 10 million soldiers. That's a terrible 10, Connor. Get it together, bud. But we'll just say 10 for 10 million. So we'll do 10M. So Army A has 10 million soldiers, okay? And then Army B has 65 million. Wow, I just guessed. And it's actually at 64. That's pretty impressive. Today must be a good day. So Army B has 65 million. Army A only has 10 million. Who do you think is going to win the battle? Who do you think is going to win? Well, probably Army B, just because they have the numbers to win. So if Army A was going to defend this price point, they say this is the line that we have to defend or else we're all dead, okay? They only have 10 million soldiers to do it. And today, Army B is already pressing the front line of Army A with 65 million soldiers. Yeah, they're probably going to break through. There you have it, ladies and gentlemen. That is a very key way to know when penny stocks are going to have good runs, okay? Now, we're going to take a look at the intraday trading, and I'm going to show you guys my strategy. Ready? So look at this. Ready? I guarantee that HUSA stops right here. I bet we have a little bounce, maybe a little green candle or something. Why? Because it's bouncing off our trend. You don't see a trend line over here, do you? You see one here, but you don't see one here. But why? Because we run a 2-chart system strategy. Okay? Look at the difference. HUSA in the right chart is showing a gap here. So this is only calculating the stock. Look at the green candle. Boom. How did I know? How did I know? Look at, now this candle's going to go up to this line here on the left, right? It goes right to there on that line on the left. It'll probably do a little bit of hesitation, you know, whatever you want to call it, but it'll probably stop here a little bit, see a little bit of selling action, okay? Now, back to what I was talking about. The 2-chart system strategy we run, okay? It shows charts with a gap, and then it shows charts on the left with pre-market data. So on the left, we look at the stocks containing all trading activity from start to finish, from after hours trading to pre-market trading to market open. Whereas the one on the right, we just look at data from stock market close to stock market open. And what that's going to do for us is it's going to plot our trend lines in 2 different locations. So essentially, we know exactly where stocks will most likely pull back to, and then where they're going to bounce and stop at. Ready? See? Look at it. We went right back up to that trend. Now, this may not be the best example in real time because of, it doesn't matter. I'm not going to go too far in depth. But now let's go take a look at the chart on the left. All right. Look at this move up. And this looks a little bit different now, but you can see there's a perfect bounce on that trend line. Now, as the day progresses, all of these lines are going to become attracted to specific points, which is going to make this look picture perfect by the end of the day, which is completely false, right? You have to trade it in real time. But as you can see, I just showed you real time right there. We came right to that trend and bounced. Now look at, ready? Now when we look at this, remember when I just showed you the trend line was all the way down there. It was on the bottom. But now it's right here. Why did it move? Because this is a trend line. The trend is supposed to help you identify trend. Well, the trend line has to properly update as the price of the stock moves. So if the stock moves up, the trend has to move up, right? And then if the trend goes back down, then this is going to go down. But you can see that in real time, as you get to these levels, they play significant parts, okay? So let's go take a look at this DSWL stock. Let's see what's going on here, all right? So essentially, this stock has ran all the way up into our green and our blue line, which is resistance. And you can see we have now pulled back to where? Look at the chart on the right. We've pulled back right to that trend line. And now we're holding a bounce, okay? As soon as this trend here at 298 or so, once that snaps, it's going to get bloody red, okay? Once it snaps and or if it snaps, you're going to see this drop out most likely down to here. So I want to show you this, guys, in real time so that you can see that my strategy does in fact work. And we put it all on YouTube for free. You just got to go find it. It's called a YouTube video called "This Strategy Will Make You a Consistent Trader." There literally could not be anything more specific to the point. It literally will make you a consistent trader, okay? So you can see on the right, we break that trend line, okay? This is where the market might get a little weak, okay? You have to close above that trend in order for the bulls to remain strong. So let's see how we close. We have a total of almost about 40 seconds left till this candle closes. So by the time this candle closes, we should have more resolution on what might happen. 30 seconds to go. You can see the candle is trying to hold above that trend. It's starting to fail. We have a total of almost, there we go, snapping down, okay? There's a little intermediate level here that we might do a little peak on, about 294, but as soon as that gives way, we should just target. We're going right down to this 284. We got close, not quite, but very close. We still might get there. We still got some traders in there who will probably panic here in a second. All right, so we came down close to that trend on that candle, did not touch it, but that just means that this next candle might be the one to touch it. But that's our target, right? We came pretty much down to that level. You see a little green candle. Let's go see if there's anything else in this market today that is moving that we could possibly show you. Okay, look at, here's the blue line. Look what happens. We're seeing resistance. So there's a good chance that you're going to see a little pullback here with JMIA because, again, it hit that resistance point. You ran into it, red candles, okay? Let's go take a look at something like AMD. Okay, well, that's working. So you can see here on the right chart, we have bounced all the way back up to that dotted trend line. We went over it briefly, but now we're starting to get a red candle. This candle will most likely pull back all the way down to that yellow line, and then it's going to stop and or hesitate for a second. Ready? Boom. There you go. Right back down to that yellow trend line. So if you thought this trend was going to continue, you could dip buy off that trend line. Look at, there's a candle that holds, right? So now the bulls are trying their best to hold this, okay? If they're successful, they might creep this price all the way back up to our next target, which is here. I don't think they're going to be so successful for right now. I think that the bears are going to win this move, and they're going to actually snap this down just a little bit. So what we would have to do is actually look at, say, something like the NASDAQ, see if the market's seeing any sort of weakness. Right now, the market isn't really on any super significant resistance that would cause this to drop out too much. But because I'm a little crazy, let's do it. Let's start taking shorts on this, anticipating we have a little bit more of a pullback here. Come on. Let go. So got a fill of 200 shares there on the ask. Couldn't get more. Now we'll just cancel it. So now in this situation, I mean, really, you're not going to make a whole lot of money until the price would come down and crack below that trend line, okay? Now you might be saying, Connor, oh, it's squeezing. Why is it going up? Well, look, I'll show you. QQQ. This is the NASDAQ. The NASDAQ just put in a pretty solid green candle. That is helping the movement of AMD back to the upside. Now look at where we're going, right to our next target. So that is the next target on the upside before we're probably going to see resistance. So should I cover? No, I think I'll just add in some more shares short. So now in about 500 shares short there. Okay, I'm going to unlink this chart just so you guys can see what's happening to QQQ, which is the NASDAQ. Bam, NASDAQ is seeing a red candle. This is a good chance it's going to cause AMD to go red here. We'll see. Can we get it? Come on, baby. Just a little bit more. Just a little tizzy. Just a little tizzy. Come on. We needed to snap that yellow line that I showed you for a better trade. So we go to the yellow, snap through, boom, 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 take some shares off, hit them on the bid, sure, why not? All right, so we took off some shares there. I put on the bid to get out. Market makers are juicing the price back up. That's okay. That was a good trade there. Would still like a little bit more to the downside, but we probably won't get too much more. So we'll cover that. So that was a good trade, right? Not too bad. Didn't really make a whole lot of money. Could have made more if I took them all off there just in one short price move. But there you go. There's a little bit of live trading for you. Look at the screen on the right. Look at where the candle's going back up to. So QQQ bounces. Look at where it's going. Right to the trend. Bam. So I hope you guys liked this video. I hope you learned something new. Make sure to tune into the channel every single day, Monday through Friday, so you guys get our morning watch list. They are probably some of the most detailed watch lists you can get on the market. I still don't know why they don't get so many views. We literally tell you many times exactly where the price is going to go. So make sure to follow us, hit the thumbs up, and actually, you know what? We'll show you another trade right here. Ready? All right, I'm going to join the ass. I'm going to start going short here again if I can get some fills. Okay, why? Because look, we just squeezed right back up to close to this trend. So that's going to be our next resistance point. Now, the QQQ NASDAQ is still a little strong, so we're probably going to see AMD go up a little bit higher here. So we just got to make sure that we get a good average in at about 80, 81, maybe a little bit over. So when we get that pullback, we can be profitable. Okay, so I'll make sure to take some shares there. Go short again. Add in more, a couple hundred. Cancel. Okay, that's fine. So we still got some more shares up here. We're in 500 shares short. Really, we want the average to be closer up to the 80, 82s. All right, take some shares off there. There's a good short trade. We'll close that. Why not? There you go. Right there. Boom. Another short trade. Now, it was quick, but again, this is how the market moves. It goes from point A to point B. and you only get those really big moves when you're faking out a portion of the market. So hope you guys liked the video. I hope you guys learned something new. We're going to end it there. Thanks for tuning in. Hit the thumbs up button. Make sure to tune in every single day. We kill it. Thank you. Love you. See you in the next one.